Episode 45.
Hey, this is Josh Elledge from UpendPR.com and SavingsAngel.com, and I've been in the media over 1,500 times, but there's no finer place I've ever been than on the Small Business Puzzle podcast, which you're listening to right now.
Struggling to get your business online? You've come to the right place. Welcome to the Small Business Puzzle Podcast. Now, here's your hosts, Michael and Teresa Blaze.
Welcome to the Small Business Puzzle Podcast. I'm Michael, and I'm here with my wife, my business partner, and the love of my life, my wife, Teresa.
Hello, everybody. It's been a while since we've been behind this mic.
Yep, it has indeed. We took a little time off for Christmas and so on and so forth. Hope your Christmas was bright. And just let's start off by wishing you a Happy New Year.
Happy New Year. Can you believe it's 2018 already?
That's scary.
Yeah, I know. It seems very, very, very... Oh, 2017 just went by so fast. So many things that happened.
Oh, yeah.
So, let's start out by talking about the plans that we have for SBP.
Okay. Mike
and I, guys, we've been giving this a lot of thought. Now, we have enjoyed doing the interviews and the podcast, but, we started this by also producing content pieces and content episodes, and we feel, we enjoy the interviews, but we want you to also get to know us, and we want to have more of a direct hand in helping you guys. And so, Mike and I have decided, we batted around a bunch of options. Do we cut down on the number of episodes in order to bring higher quality content? Do we just shut down SPP altogether? What do we do? Because we want this to be the best quality we can make it.
Yeah. And we've had some consistency problems. It's been, if you've never been behind this mic, I can tell you, it's not easy what we do. It really isn't. There's a lot of steps to it.
There really are, and add the fact when you're running multiple podcasts, because SBP is not the only podcast that we do.
Right.
You pretty much want to double the costs. You want to double everything that you're doing because you have two separate shows that you're thinking of, and Mike and I are thinking about doing some other shows, which is also scary because
we're becoming serial podcasters.
I've got so many ideas for shows. It's like when I get behind the mic, guys, just to be honest, I feel at home. I feel like it's like pulling teeth for me to actually get behind the mic, but once I'm actually behind the mic and doing what I'm doing, I feel like I'm comfortable. And so back to the original point at hand, what do we do with SPP? So here's what we came up with. One, we're going to keep to a weekly schedule, which means on our end, we're just going to have to discipline ourselves and make it happen. But two, we are going to cut down on the number of interviews that we do. Not that we don't enjoy doing them. In fact, we do. But like I said, we want to produce more content so that you get to know us and how we think a little better. So, we are going to do one episode a week like we were before. And then we are going to supplement that with one content episode a week. So it will be 1 week we're going to have an interview, another week we're going to have a content episode.
And if you have a suggestion for a better format, something that's, this is all about helping you. We're not doing this to benefit us. We're doing this because we want to help you. So if you have a suggestion on what we can do, you can reach out to us at sbppodcast spppodcast@gmail.com,
And
or you can use the contact form at the website. And that would be spppodcast.com/contact.
So, I mean, it just really comes down to, we are doing a lot of things behind the scenes. And we want to bring you the best value that we can. So, and also, if you guys have someone that you want us to interview, hey, I'm all for it. I got my ideas, but you know what? My ideas can sometimes get turned into nothing, And so, I want you guys just to do that. So I think, that's where we're at. Now we are going to be doing a few more things to kind of bring in, because we do kind of have to keep the lights on here. So we are looking at doing some things to keep the lights on, and we will be telling you more about them. But again, even if we do something like that, it will be strictly, we want to add value, okay? And I want to do things that are going to be good for you guys.
Yes.
So, if you guys have ideas, we're all for them. Just let us know what you want.
Reach out to us.
So,
promise we don't bite.
Much. Anyway, with that, Michael, let's move on to today's show, shall we?
Absolutely. This one's kind of timely, actually, and
Indeed.
I think you're gonna really enjoy it. Good.
Everybody has one big hurdle that they have to think about when it comes to the new year, and what would that be? Taxes.
Tax time.
Oh, how we hate taxes. I mean, come on. You're talking about doing the thing that's going to hand the government over more money. Well, maybe not. Well, so
we interviewed Good.
Go ahead.
We interviewed a gentleman named Craig Cody. Craig Cody is a certified tax coach, certified public accountant, business owner, and former New York City police officer with 17 years experience on the force. In addition to being a certified public accountant for the last 15 years, he's also a certified tax coach. And as a certified tax coach, Craig belongs to a select group of tax practitioners throughout the country who undergo extensive training and continued education on various tax planning techniques and strategies to become as well as remain certified. Within his organization, Craig has co-authored an Amazon best-selling book, Secrets of a Tax-Free Life. There we go. So, with all that, here's Craig.
Enjoy.
Good morning, Craig. Welcome to the Small Business Puzzle Podcast.
Thank you very much for having me.
Well, we're glad to have you.
Thank you.
So, Craig, I understand that you are a CPA and that your specialty is keeping your clients from having to pay excess taxes.
Yes, I'm a CPA. I have a firm. We're based out of Manhasset, New York, and our goal is to help our clients keep more of what they make.
That's awesome. I think we all can use that. So let me ask you this. If you had a group of our listeners in a room, let's say, okay, our group, our audience is podcasters, entrepreneurs, and small business owners. What piece of advice would you give them to have success in their business?
It's really all about cash flow. And there's a couple of ways to increase cash flow, and that's, getting new clients, cutting your expenses, and one of the expenses is taxes. And I would look at doing some planning on the tax horizon to keep more of what you make. People spend a lot of time. I'm sorry,
go ahead.
People spend a lot of time researching cars, researching this, that, and the other thing that they're going to buy, but they typically don't spend any time doing any tax planning.
That's a good point. it's kind of like having a business plan in a way. If you don't plan, then you're kind of leaving everything to the wind to see what happens.
Exactly. And most accountants are really good at putting the right numbers in the right boxes, but they're really looking in the rearview mirror. Whereas when you're doing planning, okay, you're looking forward, you're being proactive, and you're looking for tax efficient ways to accomplish the same goals.
Well, how do you do that, especially now that you're coming out of a previous administration whose tax policies are different from the current one?
Well, you can only plan for what's today. My personal feelings are that there's not going to be a big change in the tax code. It would be wonderful if they dropped the corporate rate down to 15% and that applied to all different corporations. I don't see that happening. But as in always with the estate tax also, you just have to plan for what there is today and leave as much flexibility in your plan to take advantage of anything that may change. So if we do planning today at 33% rate and they wind up knocking the rates down to 15%, so now we're saving 15% on every plan that we have versus 33%. We're still saving 15%.
Gotcha.
Okay.
So let's say that you have a new business owner. They're just opening a business. Let's say maybe, well,
car dealership.
Well, maybe let's get a little less complicated than that one. But we can ask that one in a second. Let's say just a consultant.
Okay. So
what would your advice be to that person?
So here's what my advice would be. Typically what happens is, somebody's going to open up a business. They call their attorney and they say, I want to open up a business. And the attorney says, okay, you should form an LLC or you should form a corporation or an S corporation. And that's what they do. I would suggest you take your CPA and your attorney and you all have a conversation and you figure out, okay, the attorney knows what's going to be best for you for asset protection and liability protection, and the accountant should know what's going to be best for you for taxes. And if the three of you take a few minutes, you come up with the most efficient plan to accomplish all your goals versus one person doing it.
Okay. Well, that's,
I've heard that before, especially reading some of the Rich Dad Poor Dad materials when they've actually talked about this, and they talk about having a board of advisors, such as an accountant and so on and so forth.
Exactly. You need to communicate, okay? And a board of advisors you're going to communicate with. People just too often when they're starting a business, for whatever reason, they're not thinking of the big picture. They're thinking of, okay, I have this great idea, or this is what I'm going to do. Okay, I need to form this company or entity or LLC, and let me call my attorney. And if they don't get the accountant involved, you may not be getting the best advice.
Boy, that makes a lot of sense. And I think a lot of business owners, because that's kind of how we were. I have a little bit of a background in accounting. I took it in college, and I worked with my dad, who is a bookkeeper, for a number of years, helping him do taxes for his clients. So I have a little bit of experience, but the businesses that we've started, we're kind of winging it, I guess. It's like, oh, someone's interested in this. Okay, I'm gonna do this and make money doing it. And you don't think about the growth or the long-term repercussions of it.
Exactly, and just spending a little time planning can make a big difference.
Well, okay, as a CPA, at what point should you move from a sole proprietor to a some sort of corporation, whether that be an LLC, C Corp, S Corp, that kind of thing?
My personal opinion is, once you're making any kind of money, you should not be a sole proprietor. Okay, there's, let's look at from the liability point of view. From that point alone, you should be inside of some entity.
Now, are you saying make money or make actual profits? Because there's a huge difference.
Making actual sales. Because as a sole proprietor, God forbid, depending on what you're selling, you get sued for something, you really have no protection.
No, that's true. That's a good point.
So, and in most places, it doesn't cost that much to set up an entity.
Where would you recommend setting up an entity necessarily?
Where did you say?
Yes.
Typically, in the state that you're operating in, is there are circumstances where we'll use a Delaware corporation or a Nevada corporation or LLC or something like that. But depending on what you're doing, more times than not, you're going to set up an entity in the state that you're operating out of.
Okay. All right.
That makes sense.
And how are you generating revenue currently in your business?
Well, we're a full-service accounting firm, so basically we deal with business owners for the most part, business owners and their personal taxes. So when a new client comes through the door or through the internet or the podcast or whomever, it starts with a tax plan. So during the tax plan, we analyze their past year tax returns for missed opportunities and sometimes find mistakes. We do a tax plan. We get paid for a tax plan. It's 100% refundable. Nobody's ever asked for their money back. And from that point on, clients will ask us, can we work with you going forward? And I have a staff of 10, 3 other CPAs, and we service our clients on a regular basis, meaning we communicate with them at least monthly. Because it all comes down to communication. If you're not communicating, that you can't help somebody.
That makes sense.
And one of the books that you've written is the 10 most costly mistakes, the 10 mistakes that are costing people money in their taxes, basically. And so what are some of the top 2 or 3 mistakes that you've seen coming into this, coming in and dealing with clients?
Oh, okay. Well, we talked about failing to plan. That's a huge one. Another one is picking the wrong business entity to operate out of. Let's see. Another one is missing medical benefits, which basically has to do with, depending on the type of entity you're set up with, you might be able to have what we call Section 105 medical expense reimbursement plan, where you get to write off, let's just say, those non-deductible expenses that you get no benefit for. Maybe you have a kid that needs braces and it's going to set you back $6,000, or you have a lot of out-of-pocket co-pays, or maybe your child has some kind of a diagnosis and he needs to go to a special school where you have to pay out of pocket, or maybe he needs to take special, outside classes that the doctor says he should take. So those things become deductible. We have a big one is missing the home office expense, and people might not think it's a big expense, but it can be, because sometimes if you have a home office, you could also have a home athletic facility. And that athletic facility, by code, can be your pool or your gym that you have in your basement. So these things open up a lot of areas.
Interesting.
That I had not even considered, the home athletic. I mean, the home office we're pretty aware of. I mean, we operate out of our home mostly, but I hadn't even considered that other option.
Right. And I mean, I go to at least 10 days of continuing education a year, training in tax planning, so I'm constantly updated and talking with different people about different strategies.
That's cool.
And so when you're looking at a client and they go, okay, well, I want to plan my stuff, and maybe I have the wrong entity. I mean, have you seen situations where they've been able to kind of turn it around, and at what cost?
Well, I've definitely seen situations where they can turn it around. And when you say at what cost, as far as what...
because I would assume that, when you walk into a situation like that, there is a huge amount of stress, because they probably didn't even, they don't know what they don't know.
Right, exactly. Key is they don't know what they don't know. Well, let's put it this way. Our typical ROI, first-year ROI on a tax plan is somewhere between 300% and 500%, sometimes higher. So, a lot of this is not rocket science. It really isn't. It's just, knowing what the code allows you to do and knowing how to implement it for your client.
That makes sense.
And I mean, that's so it's also goes back to why you might want a consultant for other areas as well, because, a lot of times they've spent more time and more years learning what they know versus you, who's trying to be a jack of all trades and a master in none.
Exactly. I tell my clients, you make your money where you make your money. Don't look at accounting and tax planning as an expense. It's really an income item. And the same thing with marketing, all right? If you're paying, if $1 in marketing cost is generating $5 or $10 or whatever, or $2, all right, you're making money. Yeah. It's not an expense. So.
Yeah, I think the important thing there, we stated this before, and forgive me for beating a dead horse, but this is where tracking comes in. If you don't track where your marketing dollars are going, then you'll have no idea of where your returns are coming from.
So well said. And it's amazing how many people don't track where their marketing dollars are going and what it's generating. And, we track it all. We track it all.
And wouldn't you say that that's kind of similar to the tax stuff? Because if you weren't keeping up with the code, I'm sure that code, especially the way things are going now with everything kind of shifting around and getting interesting, I'm sure it changes a little bit. And if you aren't tracking with it, then it's probably going to cost you.
Right. Well, I mean, in our case, you need to know your client. You need to be up to date on what the rules are and the laws are, and you need to communicate. And the same thing when it comes to marketing. You need to be, what's changing on the landscape. You don't want to be a dinosaur. And if your focus should be doing your business, you should be outsourcing that stuff to somebody else.
What is a law that has come into effect within the past year that businesses probably don't know about?
A law that has come into, let's not say the last year, because usually they come in and they're not effective for a while. So there's been some changes in depreciation. Let's talk about that. Depreciation is when you buy an asset. You don't get to typically expense it right away. You have to you get to expense it over its useful life. So in the last couple of years, there's been some changes, and they've brought in what they call bonus depreciation. And they've slowly but surely they're getting rid of bonus depreciation, which means you get to write off half of it up front, let's just say the first year, and then the balance over the useful life. And then over time, that is going to change where they're going to get rid of bonus depreciation.
Now, why don't you give an example using a physical item, because some of our audience may not be familiar with what depreciation is.
Okay, let's talk about. We'll keep it simple. Let's just talk about a $1,000 copy machine.
Okay.
So you pay $1,000 for that copy machine, and under bonus depreciation, it says okay, you could write off 50% of it the first year,
right,
and then what's left is $500, and depreciate that $5,000, let's just say, over 5 years. So let's just say the first year you get to deduct $600.
Okay.
Whereas without bonus depreciation, without taking, Section 179, which is another way of writing things off into account, you'd only get to write off $200. Mm-hmm. So that's a very, very small example.
So just to clarify, and tell me if I'm wrong, but just to clarify, then the whole idea of depreciation is to take an asset or a piece of equipment and understanding that the usefulness of that item decreases over time, and that way you can basically it's almost like planning for buying a new one, isn't it?
Exactly. So when somebody does marketing for me, they send me an invoice, I pay them, I get to write that off today, the whole thing. If I buy that piece of equipment, I don't get to write the whole thing off in that first year. I have to write it off over, let's just say, 5 years. So equipment, you don't get the full write-off at the time you purchase it. Now, there are certain other codes that allow you to write the whole thing off, but we're not talking about that for this example.
Very interesting. So, are there any tax issues? I mean, let me back up. Are there any industries that you have found to be the most difficult to work in as far as dealing with taxes?
No, nothing that really jumps out at me. Most professional firms are pretty much the same. They may be a doctor, they may be an attorney, they may be some kind of a consultant. You're pretty much going to deal with things the same way. I'd say the one thing that's a little different than most is obviously real estate. You need to know the rules for real estate and depreciation and
right.
cost segregation studies and stuff like that. But yeah, there's no industry that I could think of that jumps out at me, unless you're talking about hedge funds and stuff like that, which is really not what we're talking about.
Right. No, I'm sure it makes it interesting when a company has to keep track of an inventory on the books too. I would imagine that gets interesting. I remember that was not my favorite part of accounting when I was learning accounting. The whole accrual method.
Yes. Yeah. And a lot of taxpayers are not accrual. A lot of taxpayers are cash basis. So it depends on the business they're in. It depends on their revenues and where they are.
Right.
Whether it makes sense to be cash or accrual. And you need
and
to know those rules.
And just for the sake of the listeners who don't know, when you say accrual, what does that mean?
So accrual basically means if I sell a service and I perform the service, even though I haven't gotten paid yet, I have to pick that income up on my tax return. The same with an expense. If I have an expense but I haven't paid it, but I've used the service to generate that invoice, then I get to write that expense off, even though I haven't paid it yet.
Okay. And what about the cost method? What is that?
Well, basically, when we talk about taxation, it's basically cash and accrual. And cash is you receive $1, you receive $1, you pay tax on $1. You have an expense, you write off that expense. So if the client doesn't pay you, you don't pay income tax on that money until you actually receive it.
That seems to make a little bit of sense. So, is it your belief then that if someone is doing the proper tax planning and doing everything that they need to do, that they can generate more revenue than if they aren't taking the time to go through that?
Well, they could definitely keep more of what they're making, yes. So they could put more money in their bank account, yes.
Okay. All right. Well, I mean, it definitely seems like, you have something of real value to offer our listeners. Now, do you have an offer that you want to make to our listeners?
Yes. We are going to offer your listeners a free copy of my book, The 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. And we will give you the link for your show notes, but it is basically www.craigcodyandcompany.com/puzzle. And we'll give you that link, and they can actually fill that out, and we'll send them a copy of our book.
Fantastic.
That sounds wonderful. Well,
now,
Mike,
if somebody wants to make a connection with you, what is the best way for them to reach out to you?
They can call at 516-869-4051, or they can email at craig@ccodycpa.com.
Fantastic. Well, Craig, it has been an absolute pleasure having you on, and hopefully we'll have you on in the future. If you happen to hear about any changes that you think would be useful to our audience, please, we'd love to have you back on for that purpose.
Oh, thank you very much, and I appreciate you having me on. And to all your listeners, check out the book.
Yep.
Sounds great.
Sounds wonderful. Thank you very much for coming on.
Thank you. Have a great day.
With that, I'm Michael.
And I'm Teresa. And
Have
we're
a great
out.
day.
You've been listening to the Small Business Puzzle Podcast. To catch all our past shows, visit sbppodcast.com.